Hi, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for May 11th, 2015. Let's talk about market efficiency and opportunity. The stock market is extremely efficient at pricing in information. That means if a company announces some important news about the state of their business, it will be priced into the stock almost instantaneously. Therefore, looking at news has little value because if that news is reflected in the price of the stock, there's not much use in reading it. And that makes opportunities hard to take advantage of. You have to recognize that the market is a discounting mechanism for the future. It predicts the news before it actually happens. To beat the market, you have to look for breakdowns in market efficiency. You have to look for situations where the stock is trading on information that is not yet public. And the key is knowing what to look for. This is a chart of BNK Petroleum. I could bring up virtually any chart because they all show evidence of people trading on information before it is widely known. At the blue arrow, you can see that that stock is trading more volume with an abnormal price move after a period when nobody really cared about that stock. And the reason that that stock jumped up in price and traded more volume than normal was because investors knew that there was something in the fundamentals that was getting better. And if you reacted to that on that particular day at the blue arrow, you'd be in a nice profitable situation today because the stock has continued higher since then as more and more people learn about that fundamental change. The key in predicting market-beating stocks is to find those that are trading abnormally, and that is how you can also find breakdowns in market efficiency and take advantage of the opportunity that they present. All right, I also want to talk a little bit about my upcoming webinars. I've got 2 webinars this week, but there's always new ones coming along. Be sure to check the Stockscores.com homepage for a list of the upcoming webinars. I will teach you how to use the Stockscores tools and methods and show you the stocks that are showing a high potential to beat the market using some of the concepts that I talk about each week in this video. Whether you're a day trader, a swing trader, or a position trader, the concepts are the same. We just apply them to a different time frame for analysis. Let's get into this week's analysis. We had a pretty crazy week, starting off with some weakness to start the week. Everything felt pretty ugly on Wednesday, but the market fell to support. Anytime a market rallies into resistance or falls into support, you usually get a bounce. And that's exactly what happened late on Wednesday. You can see there was a little price bounce off of support, and that set up for the rally that happened over the next 2 days. The market has now rallied up to resistance where it is likely it will get stuck early next week. You may get a little more upside on Monday, but in the short term, it's probably going to stall there, and that volatility that we're seeing is a sign that investors are uncertain about what is going on. The S&P 500 long-term chart is actually a pretty favorable one. We're building something called an ascending triangle. The green line that I've drawn shows that the bottoms are rising. That is a sign of optimism. The red line reflects a line of resistance, the upper boundary of what investors are willing to pay for this company. The price volatility in this weekly chart is diminishing over time. That means investors are growing more confident about the valuation of stocks. So they're optimistic and they're confident. If we can get a breakout through that red line, it will imply that the market has found a reason to pay more and likely set us up for a continuation of that long-term upward trend. After being sideways for the last 5 months, the market appears to be nearing the point when it can continue the upward trend. I would say there is a 70% chance of an upside breakout and a 30% chance of a breakdown through that green line, which would be a negative for the market. The IWM, which is the Russell Small Cap Index, is also in an upward trend. It suffered a little bit over the last 2 weeks, but it has held the upward trend line. During this week, it was actually below, but it came back to close above the trend line, and so the bulls are still in charge of the small cap stocks. On the Canadian market, we had a pretty good sell-off early in the week. Now, part of the thing was that the U.S. markets were weakening as well, but it was also some election news in Canada, which hurt a lot of the energy companies, and that caused a little bit of a downdraft in prices. The volatility here is a bit worrisome. It shows some uncertainty. I do see the market stabilizing in the short term, but that short-term chart makes me want to be a little bit cautious with Canadian stocks right now. Now, the long-term picture is still okay. We're building one of those ascending triangle patterns. We really need to just break out of it. Break out through the red line, positive. Break down through the green line, negative. Watch this on a weekly chart on Stockscores and look for a break of those lines. The TSX Venture is stabilizing. Commodity stocks are slowly getting better, which is a heavy weighting of what is on the TSX Venture. And really, it's a matter of looking for a catalyst. But as the US dollar softens a bit, that gives some stability to commodity stocks, and we could see this market start to do better again. Right now, I still think you stay clear of it, but watch for opportunity if we can break out of that trading range. Here's the the TLT, which is the bond ETF. So this reflects 20-year Treasury bonds, and we've had some pretty good selling over the past few weeks from a falling top. That tells me that the bull market in bonds is definitely seeing a break, and we could see further weakness here. Now, short term, anytime you break a trend line, you often get a little sucker rally where we bounce back for a little while, but I think bonds are destined to be lower within a year, and so I remain somewhat cautious with bonds. And of course, if bond prices are going down, that means interest rates are going up. Many, of course, expect the Fed to raise rates soon. The US dollar also broke an upward trend line, again, just barely, and so it wouldn't surprise me that we see a little bounce back in the US dollar in the short term, but looking out a few weeks or months, we should see the US dollar lower. Gold is not benefiting from the weakness in the US dollar. Normally, you would expect as the US dollar falls, gold should rise, but investors just aren't interested in buying precious metals these days. That whole bull market, the world is printing too much money, inflation thing, doesn't really seem to be gaining any traction with gold buyers. And so I really see no reason to trade the gold market right now. Many other commodities are looking better, but gold and silver are not. Oil market broke out this week. We've come back to retest the breakout point, but generally oil market short term is looking okay. Long term, still in that long-term downward trend, but we are seeing some stability and some optimism starting to build in the energy market. Fear took a little jump early in the week, but it fell right back down again. And right now, looking at the VXX ETF, which reflects the S&P 500 VIX options, the volatility index options, or futures rather, no fear in the market here. And that is maybe a sign of complacency, but for now, we just don't worry too much about a break of the trend. So my ratings then: bullish US long-term, neutral short-term, neutral both long and short-term on Canada, bearish long and short-term on gold, bearish long-term on oil, bullish short-term. No rating change from last week. US stocks continue to bounce back from weakness and have not made a breakdown that warrants fear. Canadian markets suffered this week from weakness in Canadian energy stocks, but the longer-term outlook still shows some promise. Oil is improving while gold remains dull. Watch the market for a stock market breakout. That critical resistance level could get broken any day, so keep an eye out for that. That has been the Stockscores Market Minutes for May 11th, 2015. Have a great week in the market and trade well.